Welcome. In this video, can ZBCN coin come 150% pump? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When analyzing price movements, historical price patterns and movement cycles provide clues about potential future price action. In this context, the current price structure presents a particularly notable scenario. From a broader perspective, the chart clearly shows the traces of a previous upward trend. This bullish period signaled a strong bull market to investors and saw the price gain significant upward momentum. However, no uptrend lasts forever, and in this case as well, the price eventually lost steam and entered a pullback phase. It is evident that we are currently in the midst of this pullback phase. While this downtrend may initially appear to be just a corrective move, it could actually represent the beginning of new opportunities for many investors and analysts. A similar scenario has played out in the past. First, there was a strong upward move, followed by a correction, and then an even more powerful rally. Before that previous major rally, fear and uncertainty dominated the market, but the buying wave that followed the drop propelled the price to much higher levels. Therefore, even though the current decline may be concerning to some investors, it could be a preparatory phase for a major rally. The current situation appears to be unfolding in a similar fashion. The price first experienced an upward movement and then naturally entered a correction phase. This correction period also presents a window of opportunity for investors to reposition. The current price level closely resembles the pre-rally pullback area from the past. From a technical analysis standpoint, this suggests the potential for a strong rebound. In particular, high-volume buying at support levels could help the price regain momentum and lead to an upward breakout. Moreover, overall market psychology plays a significant role in such movements. When prices rise, investors often act out of FOMO and assume the rally will continue. However, when prices correct, panic sets in and selling increases. This can cause prices to fall more than necessary. At this point, institutional investors and large players often step in and take positions at lower prices. This usually triggers a sudden upward move in the price. The current decline may be creating just such an opportunity. The price levels at present offer attractive buying opportunities for large investors, potentially setting the stage for sharp increases ahead. Looking at similar scenarios from the past, it is clear that the rallies following such declines tend to be more aggressive and sustainable. During these down phases, weak hands are shaken out, the market is cleansed, and strong hands increase their positions. As a result, the price enters a healthy and strong upward trend. The current correction also closely resembles this process technically. That is, the price may be going through a consolidation or reaccumulation phase. These types of phases are often referred to as the calm before the storm, with the move that follows typically being sharp and high in volume. In addition, volume analysis provides some interesting clues. A decrease in volume during the pullback suggests that sellers are gradually exiting the market and buyers are beginning to re-enter. This indicates that the price may be gaining strength at the support zone and preparing for an upward breakout. Such scenarios have occurred many times before, often leading to strong rallies. In this context, it is crucial for investors to think strategically rather than panic. The current down phase could actually be laying the groundwork for a larger upward movement. This decline might be viewed as the final preparation before the next rally. Time-tested technical structures from the past show us that such declines are often followed by major rallies. Whether this current drop is just a correction will largely depend on whether the price can bounce off a strong support level and initiate a new trend. In conclusion, it is highly possible that the price is currently undergoing a similar pattern to the previous rise-fall-rise scenario. In other words, the current decline may actually be a trap, and while some investors panic and sell, professional investors may be viewing it as an opportunity. If, as in the past, the price bounces strongly from a support level after this drop and begins to rise again, it could present significant profit opportunities for investors. Therefore, acting based on technical analysis, being patient, and avoiding emotional reactions will lead to much healthier long-term outcomes. But we cannot rely on just this analysis alone. Let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunex Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
When carefully examining the chart, we can observe that past price movements followed a distinct descending trend, and after an upward breakout from this downtrend channel, the price experienced a sudden and strong rally. The rally that followed the breakout was particularly noteworthy, as it not only made a significant move in the short term, but also clearly demonstrated the strength of the buyers in the medium-term outlook. This upward movement led to an almost 150% increase in price. Such explosive price movements are typically seen at the end of prolonged downtrends and signal the beginning of a new trend for investors. A similar pattern has started to appear again on the chart. For quite some time, the price has been forming lower highs and lower lows, moving within a technically defined descending channel. This descending trend line has acted as resistance multiple times, with the price being rejected each time it approached the line. However, we now see that the price is once again approaching this trend line. Remembering the explosive rally that followed the previous breakout, this development can be seen as an exciting opportunity for investors. If the price manages to break above this descending trend line once again, it could potentially trigger another strong upward movement, just like before. In technical analysis, the concept of history repeats itself often applies, and previous price behavior can offer valuable insights into potential future movements. Therefore, if the descending trend is broken, it is within reason to expect a price increase similar to the previous 150% rally. What could make this potential breakout even stronger is the possibility that market psychology may support the technical development. Many investors recall similar past situations and tend to take long positions during such breakouts based on previous upward moves. This shifts the supply-demand balance in favor of buyers, potentially causing the price to move upward more quickly and sharply. Currently, the price is sitting just below the descending trend line and is gradually moving upward, supported by horizontal levels. This signals a possible approach toward the trend line. If the price breaks above the trend line with strong volume and confirms the breakout, it could mark the beginning of a new rally for investors. In such scenarios, it's crucial to determine whether the breakout is real or false. A genuine breakout usually requires strong volume and several candlesticks closing above the trend line. Additionally, a potential pullback or retest move may occur after the breakout. In such a case, the price returns to the broken trend line and bounces off it as support, continuing upward. This type of retest is a positive signal for the continuation of the rally and can provide new entry opportunities for investors. If the price bounces upward from the trend line, it can be interpreted as confirmation of strong buyers and the end of the downtrend. One of the main drivers behind the previous 150% increase was the wave of buying that followed the technical breakout. A similar psychology could now be forming. Investors monitor these chart patterns and often interpret major technical developments like trend breakouts as buy signals. This results in a rapid price surge following the breakout. Investor psychology is one of the biggest factors in the effectiveness of technical formations. It's also worth noting that strong rallies like these are often supported by a consolidation phase after the initial breakout. That is, after the breakout, the price may move sideways for a while or experience minor pullbacks to gather strength. During this period, patient investors receive early signals of a stronger move. Volume-backed buying after the consolidation can then drive the price significantly higher. A similar scenario appears to be developing in the current setup. As the price approaches the trend line, trading volume is increasing, and technical indicators are beginning to flash positive signals. This gives the impression that the breakout may be near. If this occurs and the price breaks above the descending trend line, a strong price movement, like the one described above, would not be surprising. In conclusion, the current chart setup strongly resembles the structure seen before the previous significant rally. The price approaching the descending trend line is a development that investors should monitor closely. If the breakout occurs and holds, it is highly likely that a major upward move similar to the previous example will follow. Investors should observe this process closely and adjust their strategies accordingly once confirmation of the breakout is in place. If the breakout proves to be valid and the price maintains its position above the trend line, a repeat of the past 150% increase could be possible. However, as always, risk management should not be neglected alongside technical analysis.
RSI is considered one of the most frequently used and most reliable tools in the world of technical analysis. This indicator helps investors determine whether prices are in overbought or oversold territory and can also strongly reflect trend formations and reversal signals. In the current case being examined, there is a clearly visible ascending trend structure on the RSI, and this setup is offering highly promising signals in terms of price action. The fact that RSI values are forming higher lows and higher highs over time indicates increasing buying pressure in the market and shows that buyers are gaining control. The ascending trend line observed on the chart appears to act as a support level for the RSI value. Especially now, as the RSI approaches this trend line and potentially reacts to it, it could signal the beginning of a new upward move in price. There have been similar instances in the past where RSI created comparable structures and changed direction strongly after touching such trend lines. This demonstrates RSI's ability to reflect not only overbought and oversold zones, but also trend support and resistance levels effectively. For investors, ascending trend structures on RSI are signs of strong momentum. If the RSI bounces every time it touches the trend line, it means that investors are buying during price dips, market confidence is intact, and the upward move is being supported. When RSI moves within the 30 to 70 range and gains upward momentum after touching such a trend support, it suggests that price is also finding support and may move toward the next resistance levels. More importantly, the consistency displayed by RSI in these trend patterns is extremely helpful for both short-term traders and long-term investors in their decision-making process. As long as the ascending trend on RSI continues, any dip in price can be seen as a potential buying opportunity. Therefore, this recent approach to the RSI trend line could be a very critical level for investors. A bounce from this level could be an early indication that price may also move upward from its current position. Additionally, RSI approaching the ascending trend line could signal the end of a possible consolidation phase in the market and suggest that a new wave of upward movement is about to begin. Since RSI is an oscillator with the potential to lead price action, this ascending structure on RSI can be considered a precursor to bullish formations that have not yet appeared on the price chart but may soon emerge. If RSI bounces from this trend, investors may not only hold their existing positions but also find the confidence to enter new ones. Ascending trend structures are considered strong setups in technical analysis, and when such a pattern forms on an indicator like RSI, it represents sustained strengthening in price action. As long as each new low formed by RSI stays higher than the previous one, the continuation of positive momentum is assumed. Therefore, each approach to this ascending RSI trend line signals technical opportunities that should be carefully watched. When considering how price reacted in similar past scenarios, the reliability of signals from this setup increases even further. It must be remembered that no signal in technical analysis carries absolute certainty. However, ascending trend structures observed in a reliable indicator like RSI can provide significant advantages when interpreted correctly. Given the current setup, the fact that RSI is touching this trend line makes it highly likely that price will also move upward in parallel. If RSI bounces from this area and gains upward momentum again, it could trigger a new wave of buying in the market. In such a case, price could test previous resistance levels, and breaking through them could initiate a move toward higher targets. On the other hand, this ascending trend structure seen on RSI also shows that investor sentiment is beginning to shift positively. Buyers are gradually gaining more dominance in the market, and selling pressure is slowly being replaced by buying demand. This supports the price technically as well. Each bounce from the RSI trend line confirms that price is in a stable upward trend. If these types of setups continue steadily in technical analysis, the price can also progress by forming higher highs and higher lows. Moreover, the strong technical stance shown in this ascending trend pattern on RSI can often precede trend reversal signals. If RSI turns back up from this support line, it could signal not only a short-term recovery, but also the beginning of a new medium to long-term uptrend. A bounce from this line toward the 70 level on RSI could drive price upward with similar strong momentum. This would indicate the presence of a positive technical alignment. A simultaneous rise in both RSI and price shows that momentum is strengthening and buyers are in control. The RSI approaching this trend line and potentially finding support there may also help identify a reversal movement on the price chart that hasn't yet appeared. This once again highlights how valuable and leading the data provided by the RSI indicator can be. These types of technical structures not only allow investors to assess the current situation, but also help them make projections about future price movements. The RSI's reaction to this ascending trend line carries critical clues about the potential direction of the price. In conclusion, the ascending trend line observed on the RSI and its approach to this line represent a highly important signal regarding potential future price movements. If RSI touches this trend line and reacts upward, the price could similarly move higher. Considering the opportunities offered by such setups and technical analysis, it becomes clear once again that RSI is not just a measure of momentum, but also a powerful tool for understanding the direction of price trends. As long as this ascending trend on RSI remains intact, it can be said that the overall market structure is still positive and buyers are in control. In other words, unless this technical setup breaks down, the price is likely to maintain its potential to move upward. RSI needs to bounce from here.
Yes friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.